Good morning, everybody, and welcome to Policy in Practice's webinar. Just while we get started, I am going to share the screen, and hopefully you'll be able to see the slide deck in front of you now. Yes, so thank you very much, everybody, for joining us on today's webinar, which is titled Council Tax Support Models that Members Can Sign Up to. And it's great to have so many of you here today on this very timely webinar. We have a lot to get through, so I'm going to go at pace. So do forgive me if I run too much on things. We are going to have slides and the recording available afterwards, and plenty of time for Q's and A's. Just a little bit of housekeeping, if I may. If you could raise your digital hand for me in the panel to your right, so that I can check that you can hear me okay. And in that same panel, that's where you can ask questions of our wonderful presenters. So please pop them in throughout the webinar as they come to you. We have 3 polls for you today, some really nice, short, punchy polls, and there is a survey at the end of the webinar. And we aim to have you on your way by 11:30. Okay, I can see lots of hands going up, so thank you very much, everybody, for that. Okay, well, just before I hand over to our first speaker, for those of you who maybe haven't heard of Policy in Practice before, just a very brief introduction about who we are. We believe that the welfare system can work better, and we have 3 services that we have developed to help organisations to do just that. We have a team of policy professionals who've got extensive knowledge of the welfare system and also are very passionate about making social policy work, and so we do lots of policy work. You may have seen us in the media with some of that. We also do some analytics works as well. We help local authorities to use their household level data to identify vulnerable people, target support and track interventions as well. And we also have our software which we have developed to help people increase their income, reduce costs and help them to build financial resilience. But what we're actually talking about today is our data modelling service, and this is the data modelling that helps model the impacts of changes on vulnerable people, scheme costs, arrears and enforcement with council tax support modelling. So that is what we're talking about today. So I do hope you are in the right place. So as I mentioned, we've got some fantastic speakers for you today, and very briefly I'm going to ask them to introduce them, to say hello so that you can hear their voices, put the voice to a picture. My colleague Zoe Charlesworth is here today. Zoe, do you want to say hello?
Yeah, hello, good morning everyone.
I have Allan Clark, Revenue and Benefits Manager from Barnet Council, as our guest speaker. Allan, would you like to say hello?
Hi, good morning everyone.
Brilliant. And I have my colleague Megan McLean, Policy and Operations Analyst for Policy in Practice. Megan, do you want to say hello?
Hi everyone, morning.
Brilliant, lovely, thank you very much. And the eagle-eared among you will have spotted the 2 Scottish accent, which is always brilliant to have. Our agenda today, very simply, Zoe's going to talk about the background to council tax reduction schemes, looking at what's happened in the past and looking at significant issues to consider when changing or thinking about changing schemes. And as I say, Allan is going to talk about why Barnet Council wanted to change its council tax reduction scheme and how the council involved members in their scheme changes, and that is the focus very much of the session today. And then my colleague Megan is going to talk about how we help model, what we look at when we help people model CTR schemes and why. Those are the particular issues that we look at. So without further ado, I'm going to serve the first poll just to get us started and get us on our way. So what I'd like to do is ask you, what would your members' main objective be if you were changing your council tax reduction scheme? So if you just bear with me a second while I launch this poll, and that should be coming up on your screen round about now. Okay, so as I say, the question is, what would your members' main objective be if you were changing your CTR scheme? And the options that you have, 5 options, and please choose just one. Would your members want to reduce the cost of the scheme, i.e. the cost of the benefit? Would they be most interested in reducing the admin costs for the authority? Would they like to reduce or avoid increasing arrears and costs to residents? Would they be looking at aligning support with universal credit, or would they be looking to reduce poverty and inequality? I can see lots of votes coming in, so I'm going to leave it a little while longer. It's great to have all of the different views coming in. And I do appreciate that this is year end for people as well, coming up to the end of March. Hopefully everybody on the call is in a great place with that. So thank you very much for taking the time to join us today. So we have the majority of people voted. That's fantastic. So let me close that poll and share the results with you on your screen. So I do hope you can see there on the screen. Okay, so we have 33% of members, their main objective would be to reduce the admin costs for the authority, and there's also 33% of you say that members would look to reduce poverty and inequality, so that's a very interesting tie there, followed by 20% would look to be looking to reduce or avoid increasing arrears and cost to residents, 10% reducing the cost of the scheme, and 3% aligning support with universal credit. Zoe, any comments, Zoe, on those poll responses?
Yeah, I think that when we've spoken to local authority members, we've worked closely with so many authorities, and quite often we've been involved in meetings with their members as well, or we've heard feedback from meetings with their members. And the reduction in poverty and inequality does seem to be high up there for a lot of elected members, and cost. It's always seemed to me that they're reducing the administrative cost and aligning support with universal credit and around arrears and cost of collection seems to have always come from the officer side, who are very, very aware of small changes or big changes like universal credit that are increasing admin costs. And they're aligning the officers are aligning their objectives with the members' ones, obviously, because the two have to be aligned. So it's very interesting to see so many members that are concerned about the admin cost as well.
Brilliant, excellent, thanks Zoe. So let me hide this poll and move swiftly on to yourself, Zoe. Thank you.
Thanks, Janet. I think this is a very, very timely webinar because we've just had the Institute of Fiscal Studies report looking at council tax support schemes and the implications of the choices made by local authorities to date. And if anybody hasn't looked at this report, it's worth looking at. It only covers up to date. It's not looking at the impacts of universal credit or the current decisions that are being made, and we'll come on to those later. But actually, there were some really interesting findings that came out of this report. Because of the timing of this, I'd quite like to touch on those first. So for those who haven't read it, let's just pull out some of the highlights. I mean, I think it's worth remembering initially that council tax support, although we know, especially people who work in housing benefits and council tax, it looks small compared to housing benefit. But it's actually one of the, the largest means tested. More people have council tax support than any other means tested benefit. This is obviously because it covers working age and pension age. But we're looking at 4.9 million households, and which is a 4.1 billion cost to local authorities. And for local authorities, that's 11% of their council tax bills. So this is significant, not just in terms of the number of people who are claiming it, but the impact on local authority finances. 2.4 million of these people who claim council tax support are of working age, with an average award of 770 a year, and that's significant for people on low income. And I think it's really important that IFS started by bringing out the significance of council tax support, because we often forget about it when we're looking at universal credit and other means tested benefits. Thanks, Janet. I'll move on to the next slide. So this is the headlines from what they found. None of this will take anybody by surprise, but 90% of English councils made changes to their CTS scheme, and nearly all of these were cuts. So in 2013, when localised council tax scheme came in, 82%, so we just had a rise of 8%. The most widespread change, and the one that nearly all local authorities have implemented, is a minimum council tax payment. And the most common level is now 20%. A fifth still have no minimum payment, but a fifth also have payments over 20%, with the highest being 50%, which is an awful lot. And when you consider this is very almost a postcode lottery. If you go from 50% in one area and across the road, it's zero. It's quite significant. These have generally, we've seen an increase since 2013. And I'll just illustrate with this with the graph on the next slide. You can just see a movement across to the right of the minimum payment. So when council tax support was first introduced, we were looking at between 5 and 10% as your modal area where most of the schemes fell. And now we're looking at the 20%. So the whole graph has shifted to the right. Thanks, Janet. So what other changes did the report bring out? This won't really surprise anybody either. The capital limit was very popular. 104 councils has adopted a capital limit. Bang caps, similar amount of councils. Changing the taper rate wasn't as popular. I think this is because of the impact on work incentives, and of course if you're adding under whether you're looking at universal credit or legacy benefits, particularly under legacy benefits, you start increasing that taper rate and you can start making it more expensive to go into work, that your whole taper rate of all your means tested benefits can end up being over 100%. So I can see why councils are a bit more wary with the taper rate. Most councils, well, not most, 113 councils are protecting vulnerable groups. And we do see this a lot when we talk to councils. Overarching council strategies have to be reflected in schemes, and if there are specific groups of people that the council has other policies that they wish to protect, or they're protecting, or they've historically protected, those tend to find their ways into the localised schemes. But the graph on the right is quite interesting. If you can see that most councils, if they're have introduced a change, haven't just introduced one change. So we've got showing all the way along from those with 0% minimum payment to those with 20%, but particularly those with a greater than 20% minimum payment, you can see that they've also included ban restrictions and capital limits. And I think that's local authorities are trying a very, very tricky balance of protecting people, but finding ways to contain costs so that council tax support doesn't have to be supported, the cost doesn't have to be covered by other income. But this all has implications for claimants. And again, this is from the IFS report. So working age households now get 24% less than before localised council tax support was introduced. So this is a reduction of 706 million in entitlements. The cuts are now 70% more than 2013-14. I think initially when we saw localised council tax, we saw councils sort of dipping their toes in the water with small minimum payments, and these have just increased over time. They've just crept up year on year. 1.4 million households now have to pay some council tax who wouldn't have had to pay under the old council tax benefit scheme. 63% pay more than £100. We've got 10% paying more than £300. So, and that's quite significant. And remember, these are just the people who didn't have to pay anything under the old council tax benefit scheme. We've also seen that reducing council tax support significantly increases the probability of a household being in arrears with its council tax. And there's been some very interesting figures from CAB on this. They've noticed that in an area where minimum payments are introduced, at that point in the months around where minimum payments are introduced, they're seeing inquiries go up 15 to 20%. So it obviously creates a lot of stress on household finances. But there's also implications, obviously there's implications for councils. I mean, councils have to meet budgets. We know that their finances are stretched, but a quarter of additional council tax liability when amendments are made to make to reduce support, a quarter of those in general is not collected, but that means 3/4 is. So from the council point of view, these changes might well still be worthwhile, and that's a 10 times higher than in 2012-13. This still has a tiny impact on your aggregate non-collection rates because, of course, council tax support is, those claimants on council tax support is very small compared to the council tax inert area as a whole. So that just sees an increase from 2.5 to 2.7. And interesting finding from the IFS reports was that arrears are twice as likely as those moving from zero payments to starting having to make payments. And that's not surprising. They have to get used to making payments. People might have had many, many years of not making any council tax payments. And so for people moving from zero to small payments, we're seeing a much bigger jump in arrears than people whose payment is increasing. And it's interesting that the previous IFS report on this did say that as minimum payments rose at 14, there was up to 14%, there was a sudden jump in arrears, and again at 25%. So people sort of managed minimum payments as they crept to 14%, but that seemed suddenly at 14%, there were groups who just could not cope, and similarly at 25%. And the lone parents and renters are those more likely to fall into council tax arrears as a result of changes in support. So that's the IFS report, and if anybody hasn't looked at it, I really would suggest you look at it. It's just very interesting. It's not very useful though in looking at where we're going in the future, because it sort of takes us up to 2018-19. Very, very interesting, but if we want to look at where we're going to be going in the future, then we have to look at what we're being asked to do as a company at the moment. And there is a huge shift here. If we look a couple of years ago, nearly all local authorities we were talking to were looking at making small tweaks to the current system, to the old council tax benefit system. So they were increasing the minimum, they wanted modelling on increased minimum, changing non-dependent deductions, things like that. And very few people were looking for any discussion around discount or income banded schemes. And we've just seen these positions absolutely switch. As universal credit's been rolled out and the increase in reassessments has started kicking in, I think people are looking forward to how can we overcome this. I mean, obviously there are ways of overcoming it within the default scheme, but I think people are looking at very imaginative ways, and we're looking at a lot of income banded and discount schemes now. I'll move on to the next one. Thanks, Janet. So yes, most of the changes we're discussing with local authorities at the moment are around responses to UC, and I think this is partially because your residents are going to have a change in their income anyway as they move to universal credit. And even if the local authority does nothing, that person's council tax support will change. For a lot of people, council tax support will change anyway, even if nothing else is, you make no other changes, and this is because income and the needs side are calculated differently under universal credit. And we're finding that local authorities are wanting a scheme to go alongside universal credit, and that can mean two things. It's either to support the aims of universal credit, i.e. keep making sure that work pays, or it can be for other councils, that sentence means supporting those who are adversely affected. So it's a response to universal credit, but how it's interpreted will differ between local authorities. With this, of course, with universal credit comes an opportunity to use universal credit as the assessment of income. And I think this is something that most councils are hoping to harness. It does mean that within local authorities, you're not going to need, depending on your scheme, obviously, but you may not need to do assessments of income, assessments of capital. If somebody else is doing it, you know you can get that information. A lot of local authorities are hoping to harness that and to reduce their administration costs. But the big issue, of course, is the administration costs and the change in universal credit, monthly change in universal credit awards for even people with regular weekly based income does mean reassessments are going to be ongoing. We did some work with one local authority mapping over time a longitudinal study, and I think it was 3 times as many reassessments under universal credit as under legacy benefits. So I think that looking at the discount and banded schemes is a method of trying to contain these reassessments, as reassessment will only be needed as you cross bands. Thanks, Janet. Oh, we've got a little roadmap here. We just put this up just to show you there's still a lot more to come. So changes, people are making scheme change in response to welfare reform change, and we've still got a long way to come. But if we ever do any modelling with local authorities, we do take into account all the future changes as well, so that it's very difficult to sort of estimate how much a scheme's going to cost, who's going to be impacted, if you can't take into account future changes that have already been announced in welfare reform. Thanks, Janet. Going to just quickly go through this. We had the poll at the beginning about the key concerns of members. So as I said, we do talk to a lot of local authorities. We hear, we work with them on schemes, they take them to members, they come back. We have also been involved in discussions and presentations to elected members. So these are the areas that, it's all the things we saw in the poll that we think are of concern to members. And of course, one thing we've got to put in here that wasn't in the poll is elections. But actually, timing of scheme change is really important for elected members, because any change, you will, even if it costs the same, you're likely to have winners and losers. And there has to be an understanding of the impact of that, a political impact of that. Thanks, Janet.
Thank you, Zoe, and sorry for the trigger happy stuff there on the slides. What we've got here now is the opportunity to put another poll to you for the interaction. And this poll, this time we're asking, how actively involved would your members be in your CTR scheme design? So if I just launch that poll, hopefully you can see that on your screen there now. So as I say, looking for your answers here, just one of three options to choose from here. So yes, so how actively involved would your members be in your CTR scheme designs? And the options are they'd be active from the very start when the objectives were set. They'd be active from the start and at key points throughout, or they'd only be active and involved at the very end when the final decision is required. Some very interesting stats coming through. I'll just give you a couple more seconds to place your votes. It's quite close. Brilliant. I think most people have voted. Thank you very much. And it looks like quite a mix. Excellent. Okay, so what we have here then, 39% say members would only be active at the end when the final decision is required. 32% say that members would be active from the very start and at key points throughout, and 29% say from the start when objectives are set. Quite a mix. Any thoughts on that, Zoe?
Yeah, now having worked at 3 local authorities, I think the involvement of members does differ hugely between local authorities. It's just unbelievable that these are the same sort of set of organisations. So that doesn't surprise me. I'm very interested to hear from Allan about what's been happening with the members at Barnet. So I'll move on to introduce Allan now. We're going to be talking to Allan Clark, who's the Revs and Ben manager at London Borough of Barnet, and I'm going to be quizzing him about his council tax support scheme. But before we start, I just wondered if, Allan, you'd like to introduce yourself and let us know some of the challenges that your council was facing when you looked at scheme change.
Yes, no problem. Hi everyone. I think for us, the drivers for change was a lot of the things that was picked up in your first poll, actually. The increased administration, that was our main driver for looking at making a change to our scheme for 1920. It was also around the costs and the opportunity for collection as well was our main sort of reasons. And that's why we got involved with policy and practice to help us with some of that modelling.
And do you find that your members had the same objectives and concerns as the officers? Were you feeding to them, or were they feeding to you the key concerns to be met through scheme change?
Yeah, I think it was a bit of both, actually. Again, looking at your last poll, we were probably middle of the road with that. They were involved from the start and throughout our process. I think it really kicked off for us when we were looking at our medium-term financial strategy last year, which obviously involved key members in those sorts of considerations. So when we were looking at savings, etc., for a council, this council tax support scheme was certainly one area. So right from the outset, members were involved, and part of the drivers was savings, so clearly they were keen to make sure those things were achieved, but also at the same time equally trying to minimise the impact for certain specific groups of people so that it was more seen equally across the board, I suppose. So yeah, your slide that's just came up there, Zoe, the drivers for change. Again, it probably links back to your poll actually. From an administration perspective, our Revs and Bench service is delivered in partnership with Capita, and through reporting they've been providing us recently, the volumes of universal credit notices have just went through the roof. And they've actually, to help with this, had to set up a specific team that purely deals with this sort of workflow. So that was a key concern for us for that partnership moving forward. And I think looking at the opportunity for better collection levels by reducing the monthly rebilling for universal credit, from some of the analysis we had carried out, because of the ongoing changes of circumstances that we were creating on the system, some customers who wanted to pay their council tax didn't get the opportunity because a new demand notice had been served before the instalment was actually payable. So that was probably our second biggest reason. These things are probably, and on the slide here, this is probably the flow that they took as well. So the next thing we were looking at was the simplified scheme for both our officers and for residents. So we wanted to move away from a means tested benefit and onto something simpler, looking at banded schemes, which we hope will also give us more opportunity at a later date to provide more automation when we're receiving these universal credit notices. And then I think touching on the last point there, sorry Zoe, about the overall costs. One of the problems Barnet faced, and I'm sure it's true across the board for local authorities, is since 2010 we've already saved about £155.8 million. So that's been from efficiency savings in different areas. So really at this point in time, along with many others, we're finding it difficult now to find additional savings. We've identified a budget gap of about 70 million between now and 2024. So unfortunately, one of the areas that we did have to look at making a cut on to balance the budget without the use of reserves was council tax support, unfortunately.
Thanks.
So
And
in answer to your question, I think members, because of the nature of it and the savings that's been made, they've been involved throughout the whole process, really.
Yeah, I just wondered, I mean, if we could, it's very interesting, your members they were right there from the beginning, and this cost thing was obviously at the fore for Barnet, but there were some other objectives they had. And I just wondered if you could talk us through the process which brought you to the final model and how that modelling actually assisted your members to make a final decision.
Yeah, no problem. Well, there's some key dates on that slide there, but probably to talk you through the process here at Barnet. We started looking at our scheme back in January 2018, which is when we first commissioned you guys to help us with our modelling going forward. I think looking at your slides and what was happening at that point, when we first looked at, or when Barnet first looked at this, it was simple tweaks around non-dependent deductions, capital, etc., that we were looking to make, rather than large changes to a banded scheme. So that's sort of where we started off from. I never actually joined Barnet until about the end of May 2018, and from previous experience and research done, I had put forward that we should look at that point also to drastically change the scheme and introduce this banded approach. So from that side of things, we had got modelling done from you guys to help us analyse the impacts that these changes we were putting forward would have. Now, initially for Barnet, the savings that we were required to make for the scheme was only £2 million. So you guys had kindly done modelling for us, raising all the impacts, picking out areas like you mentioned earlier, how lone parents will be impacted, etc. But unfortunately, on further review, our financial position, it was identified that 3.2 million savings had to be found. When we started speaking with you guys about those sorts of levels of savings, obviously that's a considerable amount of money. Our scheme if we'd carried it forward into 1920 as is, would have been about 24–25 million pound. So a 3.2 cut to that is obviously is a fair amount of money. So part of your remit with you guys, after speaking with members, was to make sure that we could minimise the impact for specific groups and try and equalise it across our whole sort of customer base. And I think it was from that, with your modelling, when you sort of reverse engineered our spend and our client and customer makeup, that you were able to come up with the bandings that you did for us.
Yeah, I think that's really interesting is the time that this has taken for it to go for the consultation with members, but also your external consultation to be brought into this. And I think it's very interesting also that there was the consultation led to more tweaks on your scheme. And I think that's really interesting because you were actually responding to your residents' thoughts that when you sent it out for consultation. I think that the time issue is something to really underline here, how long it can take to from the start of considering schemes to moving forward. I'd just like to ask you what the final outcome was. What was, if you could talk us through the scheme that you finally agreed with your and that your members were happy with.
Yeah, I mean, just quickly, if you don't mind, Zoe, picking up on the time element that you mentioned there. The time,
yeah, of course.
I think, yeah, for everybody's benefit, I think you really need to be starting this process a year before you're looking to make the changes. Clearly, as you can see through my timeline there, things were done in a shorter period of time, which did cause us problems. The governance structure here at Barnet as well required us to get approval to consult first, so we had to call an urgency committee, then we had to go to our policy and resources committee, and before it even got to full council. So I think whoever's going to be moving forward with this in future needs to make sure they've built those governance processes into their timeline as well, to make sure that they're able to meet certain committee meetings, etc., where these schemes need to be approved. And moving on to a sort of final scheme that you mentioned there, well, if you can move on to the next slide, if that's okay, Zoe. On the modelling that was done, there's some information here, just a sort of snapshot of the information that Policy and Practice provided myself for Barnet around our scheme. And I think from our point of view, just quickly first, the reason we were able to get to the scheme that we finally got to was around the depth of the analysis that was carried out by Policy and Practice on our behalf, and it was a massive help. This, what you can see on the screen here, is just a snapshot of some of the analysis that was done, but very quickly we were able to answer questions with members around, well, you can see single people impacted, couples with children, couples with no children. So all these sorts of questions were quickly answered because of the level of reporting that came back for Policy and Practice, which then led us on to our final scheme and approval.
I think we've got Janet, have we got this final scheme on the next slide? I think we might have. Yeah, there we go. So do you want to talk us around why you decided on these, Alan?
Yeah, so touching back on my very first slide there about our drivers for change, this really hopefully encompasses what we set out to achieve. So we introduced an income banded scheme which looked at purely earned income, with earnings being netted, tax, national insurance and 50% of pension cons. It ignores all other income, so tax credits, any elements, universal credit, whatever the customer may be getting, that's all ignored, and all we're looking at is purely the earned income element. We've reduced the capital limit to £6,000, which obviously also got rid of any tariff income calculations. We changed the non-dependent deductions. We've now only got 2 non-dependent deductions, anyone under £200, £5, over 211. People on DLA and PIP, etc., there'll be no non-dependent deduction for them. We've introduced a minimum income floor, which sees notional income for self-employed people declaring under minimum wage. And we no longer apply any disregard for childcare costs. Now, from our consultation, and picking up on your point earlier there, Zoe, from when we finished our consultation period, you're right, there was a few points got raised out of that, and childcare costs was actually one of the areas that residents probably had the most bad feeling about, if that's a good way to put it. And as a result of that, we got you guys to do more analysis for us based on how much these changes would, if we applied childcare costs again, how much these would impact on the savings we were looking to make. But in the end, for us, we decided to leave childcare costs out, and we won't be applying a disregard. And that's mainly because of the makeup of our scheme looking at earned income. Tax credits won't be taken into account, so anybody that's getting top-ups with tax credits, etc., for childcare costs, all completely ignored. Any childcare costs that's getting met through universal credit, all completely ignored. So we felt that by removing that, the childcare costs, I'm sort of backing up why we made that decision here, but we thought that by removing it, it wasn't really penalising people because they were already receiving income for that and from different sources potentially that we were disregarding. So that was our final scheme. And on the next slide, you'll see the bands that you guys helped us come up with. So this is what our scheme's basically based on. Anyone who's not got any earnings will receive up to 72% of their council tax liability. And then you can see the earnings thresholds there, moving down to anybody, say, earning £1,900 a month, they'll have 88% of their council tax to pay. And it's basically that simple, our scheme, and which we hope will help going forward as universal credit further rolls out in our area.
I'd just like to make a point on your scheme here, Alan, is that by just having the lowest band as no earnings and just taking into account earnings really does make the scheme work with universal credit. And it does include a means tested element, even though it's an income banded scheme, because of course, if you look at people under universal credit, it's a bit more complicated under legacy. The only income people are going, there is a means test on how much income people receive under universal credit that takes into account their circumstances in quite a lot of detail. So the income people will have above their universal credit maximum, i.e. above their needs, is only that part of the earnings that they retain. So by looking at earnings, you're actually still incorporating earnings alone, you're still incorporating the means tested element, which is why you don't end up with such an impact as if you do a banded scheme and incorporate everything else. And I think that it's always got to look forward to universal credit because people are moving forward. Just an observation there, so that this will fit very well under universal credit. And before you go, Alan, and we move on to looking in more detail about the modelling, I just wanted to ask you that if you're completing the process again, I think you're probably taking a deep breath and hoping you're not, but what do you wish you'd known at the beginning? That what advice would you give to somebody starting out on this process that you sort of realised by the end?
I think I've already mentioned it, to be fair, and that's around making sure that everything's factored into your timeline, including any internal governance process within the council. And also, I think it probably links back to how active your members are with the design and the reasons we're making change. If members are involved for the start, clearly we need more time because meetings, etc., are hard. I was having meetings with our leader, I was having meetings with the Labour group leader, and other members as well, talking through the scheme in quite a lot of depth and really explaining to them what the scheme was there to do as well, because they might not know the background. So I think taking all that into account and looking at what your internal structure is definitely key, as well as some real analysis. And I can't say it enough, the depth of the analysis that you guys provided myself really helped get this through and answer a lot of the more difficult questions that our members had. Thanks
ever so much, Alan. Good luck with that. Be interesting to talk to you in a year's time and see if you're making any other changes. I
might not have a job in a year's time.
You've made your savings now, you'll be fine. Sorry, back to you, Janet.
Excellent. Thank you, Zoe, and thank you very much, Alan. I have a screen here for questions. I'm conscious, if that's okay, if people could carry on popping the questions into the panel, and then we'll put questions through to Alan and Zoe and to Megan at the end. I'm very conscious of time, if that's okay with everybody. The next then, just as a bridge then into Megan's session here to talk you through how we do the modelling that Alan was talking about. Just a poll here, are you planning to change your council tax reduction scheme soon? So again, just bear with me while I serve this poll. It's the last poll of the day, and you should see it on your screen now. Okay, so a nice quick simple poll. Yeah, so are you planning to change your CTR scheme soon? Yes, for implementation in 2020 to 2021. Yes, for implementation the following year in 2021, 2022. Yes, but not in the near future, or no. So I can see lots of answers coming in, and it's great to see some quite interesting results. I'm going to give you a couple more seconds, and then I'm going to close the poll and share the screen, share the results on the screen. So there we go. If I close that and share that on the screen, hopefully you can see now what the results are. So are you planning to change your CTR scheme soon? 54% of you say yes, you're planning to change your scheme for implementation in 2020, 2021. A third for implementation the following year, and 14% are saying no, you're not planning to change your CTR scheme soon. Very interesting. Thank you very much. Any comments, Alan or Zoe, on those results?
The only comment I would make is I think that this urgency at 2021 and 21-22, which obviously the two most popular choices, is around universal credit, and that absolutely backs up everything we're hearing when we're talking to local authorities. I think it's got to happen, whether it's now or in the future. Yeah, sorry, Alan, anything you've got to say on it?
No, I think people for 2021-22 have certainly got a lot more time to be considering some of this, and good luck to those 54% for 2020-21.
Brilliant, thank you. Okay, so I'm going to hand over now to my colleague Megan.
Hi everyone. So I will whirl through 3 key messages I want to leave you all with today. First of all, I'll discuss the value of our data-led approach in providing insights and making hard decisions like those that Alan was discussing. Then I'll move on to discuss how we go through that modelling, which type of frameworks for models we provide, and the depth of the reporting that we provide. And then my third point will be over how we tailor this for our clients' needs. So first of all, the approach to data analysis that we take is very much led by the household level analysis. So we take administrative data from housing benefit extracts and council tax data extracts. We merge the two together and we run them through our policy engine, which takes account of over 4,000 pieces of legislation across 4 central government departments, along with the devolved administrations and council level schemes, such as CTR, of course. And then from that, we provide a very detailed impact assessment of CTR support now and in the future under various scenarios, both for those in receipt of universal credit moving forward and those who will be remaining on the legacy system. So if we can go to our next slide, Janet. The 4 approaches for our modelling schemes that I will take you through is the do nothing approach, which is the current scheme uprated to the following year that we'll come up to. Those with small tweaks to that default scheme, income banded schemes and discount schemes. So the do nothing approach, this is how we start off every report to show what would happen if the council were to retain their current scheme with no changes. But of course, this needs to factor in council tax liability increases, which we receive from the council. We also take account of national minimum wage increases and the personal tax allowance increase. We again discussed with the council the migration rate for universal credit, which as a default we have at around 20% per year, but as I said, we'll discuss this ad hoc with each client. And then we can also account for rent prices and benefit rates increases. So if you look below, we have a table from Barnet's reports, which show that actually if they were to retain their scheme into the coming year, we would see an 8% decrease in support to all working age households. And actually, if you look to those in receipt of universal credit, they would be seeing a 22.7% reduction. But of course, as we discussed, there would be no support to the council in retaining administration costs. So the cohort would be losing out while the council would still not be meeting their objectives. So in some ways, not doing anything could be considered the most radical thing you can do, because in many ways you're not meeting any of the objectives. So if you move on to the second slide, as we discussed with Allan, we for Barnet provided two models which were based on the default scheme with slight tweaks. These can include a band cap, which we were discussing earlier as well, capital limit decreases, changes to the maximum support and the taper rate, non-dependent deductions, and minimum income floor changes. In Barnet's case for Model 1, as you can see in the picture to the right, we modelled reducing the maximum council tax reduction level from 80% to 75%, and introduced the minimum income floor for both universal credit and legacy benefit claimants, while the rest of the scheme was retained. However, this was not enough to then meet the changed objectives of the council that Allan discussed to make further savings of 3.2 million. So if we move on to the next slide, we also provided two income banded schemes which were modelling the financial and social implications of sorting households into income bands based entirely on their earnings, disregarding benefits which were meeting set needs based on characteristics. And as you can see to the right hand side, we provided a breakdown of how many households fell into each band. The majority were in the most generous band of 72% of their CT liability as an award, which allowed Barnet to meet their key objectives of reducing costs while also protecting those with the lowest earnings from the highest levels of cuts to the scheme. If you look to the left again, there are other elements to income banded schemes which we can tailor according to our clients' needs. So we can introduce protections for larger households where we account for more than just earnings. We often introduce different columns for households with children and without children, and then perhaps even breaking down according to how many children are in the household. Again, just ensuring that it's meeting the objectives of our clients. And as Allan had discussed, we reverse engineer the income bands according to whether or not the scheme needs to be cost neutral or to make savings against the current uprated scheme. So if we can move forward again, Janet. This scheme, a discount scheme, we did not provide for Barnet. However, we have modelled for other boroughs in and out of London. It's quite a radical approach. We haven't had any of our clients go for it just yet because as I said, it's quite a radical approach. However, it's still very important for some to model it for the future, as in some ways a discount scheme which looks entirely at household circumstances rather than earnings or any income, it can be the most significant administrative saving, because you will only need to assess someone's income when they reach what we provide as a threshold for the scheme as a whole. Because you're only looking at characteristics such as the makeup of a household, that is less likely to change in their earnings month on month. So this is kind of this objective behind a discount scheme, but I'll take you through. So yeah, you avoid having to add up incomes. As we said, the households are sorted into small numbers of bands. As we can see in this particular example, we went for households in receipt of UC and not earning, households in receipt of UC earning below a work allowance, and households in receipt of UC earning above their work allowance. This is quite an effective scheme as we've modelled for a London-based borough, because the work allowance under universal credit is a means test which takes account of household characteristics such as disability and household size, but it means that the council themselves does not need to provide that means testing. So it reduces administrative costs while retaining quite a fairness. The other positive of a discount scheme is that it has similar effects on, it has similar impacts on the cohort between income banded schemes and discount schemes that we've seen when we've modelled the two. So if we could move on to the next slide, Janet. So the beginning of each of our reports provides a impact analysis on costs between each model. The table shown is from Barnet's report, and as you can see, Model 5, which is the scheme that Barnet have chosen, provided the £3.2 million savings against the current scheme in 2019 and 20 that were required from the members. So this was part of why Allan and his team and the members approved the model. If we can move forward again, Janet. This slide shows the detail of the analysis that we can provide on different cohorts. So if you look to, for example, private tenants, who we know to be some of the most vulnerable in terms of homelessness risk, Model 5, which Barnet chose to go for, actually provides quite high levels of support to private tenants against the remaining social tenants and owner occupiers. And could we move forward again, Janet? We also provide quite detailed reports on the social and political impacts of each model in terms of graphs, where you can see where the largest cuts are being made by various cohort types. So to save time, I'll just focus on the economic status. As Allan had said, it was quite a difficult decision to have to make such a cut to Barnet's CTR, but the table that we can see here shows that those who are in receipt of out-of-work benefits, so the lowest income households, they are the households which were saved from the greatest level of cuts under the model and the now provided scheme. So that could be considered, of course, a positive. If we move forward again, Janet. So in conclusion, we have broken down 4 of the key factors which come into play when choosing the best scheme for a local authority. Of course, the demographics and who is in need of most support in terms of low incomes, that varies from local authority. The current scheme, so the starting point and the cost, the political climate, and kind of merging in with that, the members' objectives and local priorities. So as Allan briefly discussed, we were able to discuss these with Barnet, as we do with every client, on an ad hoc basis. So originally we had one level of savings, 2 million to be made, and we modelled in accordance to those objectives. But moving further down the line, as members' objectives changed and more savings were needed, we again tweaked models to meet those objectives. And then once it was decided that Model 5 would be the favoured scheme of members, we remodelled with new data and with additional 2 models with tweaks, just to reconfirm to members whether or not this was in fact the best scheme for them. And then the analysis that we provided there allowed Allan and his team and the members to make their final decision. And in each case with our clients, this process changes according to their objectives, and we are very proactive with our clients in building that process.
Brilliant, Megan. Thank you. Thank you very much, Megan. So, and thank you, everybody. Thank you to Zoe and to Allan, and also there to Megan for a lot of information that I'm sure you're all taking in. We've got lots of time. Well, we've got 5 minutes now for some of the Q&A session, and we've got some really interesting ones. So I'm going to move quickly on. And one of the first questions I'm expecting, Allan, this one is for you. What was the biggest concern from your consultation?
From the responses, I'm assuming, yeah.
I'm assuming that too, yeah.
Probably the three main areas that came out for us was changes to the childcare costs, changes to the non-dependent deductions, and also capital. The overall changes we were making to the scheme, most residents were in favour of. It was probably mainly those three specific areas that people had the most concerns about. So childcare costs was probably up there at the top, actually.
Okay. Thank you, Allan. I have another one for you here. Can we ask Allan if they have more bands in their schedule for single or couple or families with children?
No, the bands that were on screen is the bands that apply to everyone. What is probably worth mentioning actually is going back to my timeline when we took this to our Policy and Resources Committee. Based on the responses we got to the consultation, what we also done was updated our DHP and our discretionary council tax hardship policies, which would hopefully help if any of these client groups were worse impacted than what we thought, then they would hopefully get some protection through these other means. And I think going forward, we will be monitoring the impact to our scheme over the next probably 4 to 8 months. And during that time, if we're seeing an increase in awards in those discretionary spends, then clearly that points to us to the direction that we're going to have to reconsider our scheme potentially for 21-22.
And at what point, Allan, would you make that call, do you think, given your earlier point about the timeframes and the member involvement?
It's a difficult one, and I think that's where I'm saying 21-22. If I've got my years right, I'm counting on my fingers here. Sorry. The problem is if we're monitoring this probably for the next 8 months at least, I think, to get any real data on how this has impacted our residents, it's then going to be at that point that we then need to start consulting with members, other officers within the council around the finances. So you're probably going to be talking about January next year before a decision is made that we do need to potentially change your scheme if that's where we get to. So it's then going to be the following year again, I think. So we'll need a year's lead-in time to do more modelling with yourselves for the consultation, etc., and work that through, taking into account all the financial impacts that may have. That's not to say our scheme is going to need change, I should add, but that would be a fair timeline, I think.
Excellent, thank you. Another question here from somebody else. How do you, and Zoe, do chip in, I'm not sure whether this question is for Zoe, Megan or Allan, so I'll just put it out there. How do you take into account the housing costs amount awarded in UC payment, this in effect equivalent to their old HB award, which would have been disregarded in CTB or legacy-based CTR schemes?
I think we always work.
Can I jump in? Oh, sorry.
Oh, yeah.
Sorry, on you go, Zoe.
Yes, I do. Yeah. I was just going to say that we actually always discuss the implications of going either way, either taking these into account, but taking the housing benefit amount into account to equalise, or removing both. It's different authorities will have different approaches to this. We can model anyway. Sorry, Allan, do talk about what happened at Barnet.
No. Yeah. Sorry, Zoe. Yeah, all I was going to say is probably the same as you. I think it's up to each individual council, but we've took the simplistic approach that we are purely looking at earned income for a variety of reasons, mainly from that because of the administration and the hope that we'll be able to automate a lot more of these universal credit notices that are coming through. I think at the minute, sorry, I'm going off on a bit of a tangent here, but at the minute, with some of these notices that are coming through, there's so much information in it. Automation is quite difficult to pick out the correct information, especially if you're going to be looking at other income within that. By purely looking at earnings, from my point of view, that's allowing us a much better opportunity to drive automation in the future.
Okay, and I think perhaps a related question: how do you strip out the childcare cost element? Sorry, the childcare costs element in the UC award.
Is that for me? Sorry.
I'm
yeah,
not sure
well,
whether it's for Zoe or for Alan.
I'll answer from my side then. Sorry, okay. From my side, again, because I'll stress, we are purely looking at the earned income element, so how much earnings somebody's got. I don't believe that will be an issue for us, but correct me if I'm wrong.
I think that in a banded scheme, Alan's absolutely right, that if you're only looking at the earnings, you're presuming that everything else has been taken into account in the Universal Credit Award. You're not really bothered by that. You're just looking at the earnings. Where people want to model around childcare, we make a presumption where people have entered and your data shows that there is a childcare cost. We can strip out any amount that would be included in Universal Credit for that. On a practical level, with the UC notices, you should be being informed if there's a childcare element within the universal credit costs. But obviously, if you're going to have to look at those and decide whether to take it out or not, you're putting another layer of work on it.
Brilliant, thank you. I'm very conscious here of time, and I'm just going to give you one more question, if I may. And I think, Alan, it relates back to the question you had about bans and schedules for single couple families that you talked about. How do you treat working couples?
Sorry. Yeah, I think there's again. I feel like I'm repeating myself. Sorry. So if I've missed the point, do please re-ask the question. But again, because we are purely looking at earned income with no disregards, any earned income disregards, etc. It will be if there's a couple and both of them are working, then it will be based on their joint income, etc. So does that answer the question? Unless I've misunderstood it.
No, I think it does. I think it does, and well, I'm being very assumptive there. If the attendee could let me know otherwise, and what I'll do, I'm going to.
Janet, could I just add? In terms of income bands, where we have various categories, I think this may be what their question was in relation to, where we have various categories based on household size. The councils tend to prefer to have single people and households with couples with no children in the same category, as the barriers to work are similar for both single and coupled households with no children.
Excellent. Okay. And thank you, Megan. And if whoever asked the question, if we haven't answered your question in full, please do let me know in the survey. And I know that all speakers would be happy to follow up with any questions that you have that haven't yet been answered. So that just leads me to say, give you the next steps, if I may. So as I mentioned at the very beginning of the webinar, there are some downloads there on the right-hand side for you to download now as we're talking. That's the flyer that goes into detail about the service that Megan talked about, and also the Universal Credit Roadmap there that Zoe mentioned in her slides as well. You can download that. I should be sending out the follow-up email with this webinar recording and the slides with some links, notably to the IFS report that Zoe mentioned earlier. I've got a very short survey that's going to serve at the end of this webinar when I close the webinar down. Be really grateful if you would take just 2 minutes just to give us your feedback. And you can ask more questions or clarifications in that survey, and we will get back to you. You can ask for more in-depth look at our CTR modelling, and you can also sign up automatically to our next webinar, which is on Wednesday, the 17th of April. And that webinar is going to be about using data analytics to understand child vulnerability. So thank you very much, everybody, for joining us here today. It's been a fantastic webinar. I do hope you agree. And it just leaves me to say thank you very much to our speakers. Zoe Charlesworth from Policy and Practice, Allan Clark from Barnet Council, and Megan McLean from Policy and Practice. The details are there on the screen, and so do please keep in touch. And yeah, I will leave it there. Thank you very much, everybody. Have a great rest of the day.
Thank you.
Thanks now. Bye-bye.
Bye.